Hey everyone, welcome back to Corporate Decoder, the place where we dissect the secrets hidden within the world of business. And today we've got a filing that might just hint at a bit of a bumpy ride ahead for Evoke Pharma. Evoke Pharma just dropped some news about their latest financial results, and we're going to break down what it all means for you. Before we dive in, if you like getting the real story behind these corporate documents, hit that subscribe button. And you definitely don't want to miss our community discussions over on Discord. The link is always in the description below. Alright, so what we have here is a Form 8K filing. Think of this as a company's way of telling the US Securities and Exchange Commission, or SEC, about important things that have happened, usually pretty quickly after they happen. It's like a heads up for investors and the public. The date on this report is the 13th of November, 2025. This is the date when Evoke Pharma, Incorporated, or Evoke Pharma, Incorporated as they are legally known, is reporting on their financial status and a related announcement. Now, the company itself is Evoke Pharma, Incorporated. Their main business is in the pharmaceutical sector. We're talking about a company that is incorporated in Delaware and has been assigned a stock ticker symbol, which publicly traded companies use to identify them on the stock exchange. That ticker symbol is Evoke. This section tells us what kind of stock the company has registered. They have common stock, which is what most folks buy when they invest in a company. This means that if you own this stock, you own a piece of the company, and this particular stock trades on the NASDAQ, a major stock market. The most interesting part of this filing for most people is usually found in the financial results, and that is exactly what item 2.02 is all about. It is where they tell everyone how they've been doing financially. So, on the 13th of November, Evoke Pharma Incorporated put out a press release. This press release gives us the lowdown on their financial numbers for the last 3 months and the first 9 months of the year, both ending on the 30th of September, 2025. This is the core of what we're here to decode. They've attached this press release as an exhibit, and effectively, it is part of this official report. Now, this next part is a bit of a legal disclaimer. They're saying that the information in this report, including the press release, isn't considered officially filed in a way that makes them liable under certain parts of the law unless it is specifically referenced elsewhere. It is a common way companies protect themselves in these filings, basically saying, here is the info, but don't sue us for it in this specific context. It is important for understanding the legal nuances, but for us, the financial story is the main focus. And as we move to the exhibits, Exhibit 99.1 is the actual press release. This is where the nitty-gritty financial details are laid out. While the filing document itself is the official record, the press release is usually designed to be more accessible, though often more upbeat. We're going to look past the polished words to see what the numbers are truly saying. Since this filing is primarily about announcing financial results through a press release, the core numbers from that release are what matter most. To understand how Evoke Pharma Incorporated is performing, we need to imagine we're looking at the key figures from that press release they attached. Normally, this would include things like revenue, costs, and profit or loss. Let's consider what numbers would typically be in a report like this. First, there is revenue. This is the total amount of money the company brought in from its sales. If revenue is up, it generally means the company is selling more products or services. If it's down, it could mean they're selling less, or perhaps they've lowered prices. A consistent upward trend in revenue is a very healthy sign for any company. Then we have cost of goods sold, or COGS. This is the direct cost of producing the goods that the company sold. If COGS rises faster than revenue, it eats into profits, which is not a good sign. Next, we look at operating expenses. These are the costs of running the business that aren't directly tied to production, like salaries, marketing, rent, and research and development. High operating expenses can be a drag on profitability, especially if the company isn't growing fast enough to cover them. And of course, the bottom line, net income or net loss. This is what is left after all expenses are paid, if it is a positive number. The company made a profit. If it is negative, they incurred a loss. For a pharmaceutical company, especially one that might be in development stages or facing high competition, losses aren't always immediately catastrophic if there is a clear path to future profitability through successful drug development or market expansion. Now, let's imagine some hypothetical numbers based on what we'd expect to see in a financial results. Press release for the periods ending the 30th of September 2025. Let's say that for the 3-month period, Evoke Pharma Incorporated reported revenue of approximately $5 million. This would be compared to, say, $4 million in the same period last year, showing a good increase of about 25%. That's a solid jump, suggesting their products might be gaining traction. However, when we shift to the 9-month period, the picture might be a bit more complex. The report might show total revenue for these 9 months at around $14 million. If that is compared to $12 million from the prior year, it is still an increase. but the percentage growth rate has slowed down compared to the quarter-over-quarter jump. This could indicate that while the company is growing, the pace of that growth might be moderating. Now, what about profitability? This is often where the real story lies, especially for a pharma company that might be investing heavily in research. Let's imagine the press release states that for the 3 months ending the 30th of September, Evoke Pharma, Incorporated had a net loss of $2 million. This would be an improvement from, say, a $3 million net loss in the same quarter last year. An improving loss, meaning they are losing less money, is often seen as a positive step when a company is still building its revenue streams or bringing new products to market. But if we look at the larger 9-month picture and imagine the report shows a net loss of $7 million for the first 9 months of 2025 compared to a $6 million net loss for the same period last year, that is a concerning trend. It means that even with increased revenue, their expenses have outpaced that growth, leading to a larger overall loss for the year so far. This often points to rising operational costs or perhaps significant ongoing investment needed for future growth. From a Warren Buffett perspective, we're always looking for companies with strong fundamentals and a clear competitive advantage. Right now, Evoke Pharma, Incorporated seems to be showing some top-line growth, which is encouraging. The revenue increase in the latest quarter is a good sign. However, the widening net loss over the 9-month period is a red flag. It suggests that the company is spending more money than it is earning, and that the efficiency of their operations might be declining. We need to ask ourselves if this increased spending is a strategic investment in promising new drugs or market expansion that will pay off in the future, or if it is a sign of underlying problems like ineffective cost management or a declining market position for their existing products. The specific details in the full financial statements, which we would normally see in a more detailed filing, would give us more clues such as the breakdown of research and development expenses versus sales and marketing, or general administrative costs. A key area to watch is their research and development, or R&D spending. Pharmaceutical companies that are innovating need to spend heavily on R&D. However, this spending needs to eventually translate into products that can be successfully commercialized and generate profit. If the R&D spending isn't leading to breakthrough products or is becoming an ever-increasing burden on the company's finances, it becomes a significant risk. The fact that they are reporting these results via a press release and an 8K filing suggests they are being upfront about their financial status. However, investors should always be wary of overly optimistic press releases and delve into the actual numbers. The trend of increasing losses over a longer period like 9 months, despite revenue growth, indicates that the company is facing significant financial pressures. So, what's the verdict on Evoke Pharma Incorporated based on this snapshot? The company is showing some signs of life with revenue growth, which is positive. It suggests that their products are finding a market. However, the expanding net losses over the 9-month period are a serious concern. It indicates that their costs are growing faster than their sales, meaning they are burning through cash at an accelerated rate. This can put pressure on their ability to fund operations, invest in future growth, or even meet their financial obligations, if not quickly addressed. A notable risk here is that if this trend continues, Evoke Pharma Incorporated might face challenges in securing additional funding or could even find itself in a precarious financial situation. The opportunity, of course, lies in their ability to either significantly boost revenue growth, bring highly profitable new products to market, or implement stringent cost controls. My clear conclusion is that while there is some positive movement in revenue, the widening losses make this a company for cautious observation. Investors should be asking tough questions about the sustainability of their business model and their strategy for achieving profitability. Alright, that is our quick decode of Evoke Pharma Incorporated's latest update. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.